Hi guys, welcome to the Savvy Money Show with me, your host Sean. If you find any entertainment in today's show, don't forget to hit the lovely like button. It's almost as lovely as me. If you haven't subscribed already, don't forget to hit that sexy subscribe button. It's a lot sexier than me, I could tell you. And don't forget the bell notification. Now, on with the show. We're speaking about the market, whether it's going to carry on going up, why it's going up, and if it can survive going up, whether it's going to crash. Of course, no one knows the answers to these, but we'll go through a few. We spoke before about the Fed buying these stocks and ETFs. Now that helped stop the slide of the market and bring it from complete slide down to an L shape. Well, to the start of an L shape, which could be a V-shaped recovery. What then came in was all of this. This was the drop in, this was the drop in all the markets that you had in March to April. So, of course, everyone was worried. Now, what did they do? You had Jerome with his money printer come up and print all the money. Money for you, money for everyone. So you had stimulus checks go out. You had stimulus for companies. And remember, in the first quarter, I'm not sure everyone caught it, but I even said it in one of my videos, Apple credited some of their good numbers down to government help, i.e. stimulus. Now, you got to remember that the first stimulus check, percentage of people spent it on buying new trainers, new iPads, new phones, new laptops. And then what did the rest of them do? They invested. Intelligent thing to do, considering the stock market. And what did people do since then with the stimulus checks? They started investing. They got FOMO, so they started investing. You should never invest because of FOMO, but considering the price of the stock market, it wasn't a bad thing to do. Problem was, it reinforced their delusion that all of a sudden they could go from knowing nothing at the stock market to that they could make money in the stock market. So each time they got a stimulus check, they invested more. They're propping up the stock market again. And now with the last stimulus checks, what are people doing? They're not so many are investing, which is why they're saying it may be the last stimulus checks. And then you had riots in the streets. And I know it's about the George Floyd situation and everything, and I'm not going to get too political, but when you give $3 trillion to companies and only $1 trillion to the working class people who have lost their jobs, it's an issue there. When you say you're going to give a bump in unemployment. You know, you've got someone who's working 2 jobs just to make ends meet, and all of a sudden you give them a bump in unemployment that pays more than what their jobs do, and then to stay at home. Then all of a sudden you say to them, right, we're discussing taking that away. People are going to be enraged while they're paying themselves, and big businesses who can survive this anyway, you know, while they're going on holidays. It's the way it's a situation, and then it's like a tinderbox, and you just need one thing to set it off, because racism is not a new thing. Police brutality is not a new thing, and that's about as political as I'm gonna get. Now, the unemployment rate. Now, restaurant industry gained 1.4 million jobs in May. They say 2.5 million jobs were created in May. Makes sense. Lockdown ends, so more jobs created that weren't there before. However, what you've got to realise is, from the restaurant industry alone, 6.1 million jobs were cut in March and April. So that's still more than 3/4 of the jobs lost from 2 months previously. Yeah, and they're hailing it as a success. And you know, when you we saw the interview on Bloomberg, they were shocked by them numbers. Not as if I would suggest they would be fake numbers. And you've got plants opening up. You know, I mean, look, I said about Fords. I was buying Fords. It went from $4.80, $5, $5.40 to $7 something. You know, and they brought out that technology I told you about. I told you if I bought it because I thought production would ramp it up a little bit, and I also thought with this junk bonds check they would start going into the EV market. You know, I said before how they could buy Neo for 4 billion and automatically have the EV market produced in the EV market. So because they already have a following in the petrol and diesel market in the US and UK, so why not start getting the market share in the EV and capitalize on that? Because soon they will start losing. That loyalty they have will only last so long. If you look at this graph, this shows you the blue one, shows you how what's happening to gasoline vehicles and how the growing EV market is overtaking ICE vehicles. I have an EV car. My brother could have got me a discount on the Ford car when I bought it, and I said no thank you. The thing is, all these companies that were on lockdown that no longer are, altogether, if we're to believe government numbers, would have improved unemployment by 1.1 million jobs. Now, that means that when someone's on furlough, they're considering people coming off furlough. That means that when people are coming off a furlough back to their work, they're considering them as coming off unemployment. But when people are going from their jobs onto furlough, they're not considering them as being on unemployment. Now, we all thought that they weren't giving us the real figures on unemployment, but still, the other side of it is, I said about the markets. This is about the economy and that I've spoke about so far. I said I was going to say about the markets now. So the way we look at it is, people are looking at it like this. The bottom one is Amazon. The top right is Delta. The top left is Hertz. So it's not just those companies, it's to signify what specific industries they are in. You can see where they've dipped, where the COVID-19 or the Rona from friends across the pond, and Amazon is already at a high, so it may have growth in the future, but not so much growth. Whereas Delta, we can see it's going up, but to tell the truth, it may take time to go up and get back to its highs. Whereas Hertz, we've seen since I did my video on Hertz and bankruptcy, is jumped 80%, and it can jump, as I said before, it can jump 10x, 100x even. So there's plenty of room to grow there, but then the risk is a lot bigger. I've done a video showing how many companies have declared bankruptcy, Chapter 11 bankruptcy. If you want, you might want to check that out. So the fact is, people are no longer investing for FOMO. They're no longer investing because of stimulus checks. People are putting the stimulus checks to their credit line, which is a good idea. If only the Fed was doing that. They're actually paying off their credit card, their debt, so that if they need it again or there's another crash, they can access that debt again. Whereas so it's no longer FOMO. What you have now is you have a new breed of investor who have a fear of inflation. They realise that if there is inflation, which is likely with negative interest rates, last time Bank of England interest rates touched negative, just touched, didn't actually go. Within a year or two, inflation soared and kept soaring, and took years, nearly a decade, to come back down. Now, with the US and UK mirroring interest rates so much, people are worried that the dollar is not going to be worth so much. Remember that, 20-30 years ago, there wasn't a billionaire. If you had $1 million or £1 million, wow, you got a lot of money. Now if you got £1 million, $1 million, you're doing okay. You're saying you should have that in your pension fund to retire on, because of inflation. So you want to look out for inflation and have inflation busting stocks. but people are worried about having, so they want to have assets, and that's why the housing market hasn't crashed, because people are borrowing money to go into property. So the housing market has actually started growing. Housing prices have gone up now. So I actually had someone ask me, with interest rates so low, should I get a mortgage and put into stocks? I said, that's the craziest thing I've ever heard of. I said, there's no, the crash hasn't just happened. You're not buying at a low anymore. The stocks are at a high. They're overvalued. So why would you do that? Well, the interest rates are low. I said, no. It's gone. But I can get a 5% dividend on the interest rate. Will cost me 1 to 2%. I got, yes, but then what happens when the interest rate goes up? What happens if they cut the dividend? You know, it's, you have to think about what happens if something changes in your situation or in the economy's situation, and things that you don't have control over. There could be a crash. There could well be a crash. That's why we should keep 10 to 20% cash on hand, or at least have a credit line that we could access. Now, the thing is, the market should have a correction, and I think there will be a correction soon, especially with the S&P 500. But whether there's a crash or not, it all depends how long these people who have the fear of inflation keep putting in. And I keep hearing these Robinhood investors. It's not Robinhood investors. Someone putting in $200, $600 on an app isn't going to move it. And I keep hearing the Fed's investing. The Fed has invested. The Fed isn't investing anymore. What might move it is when the Fed decides it's made enough of a profit and they want to sell it. Now, but I'd be interested to know your ideas if you think I'm correct. Even if you think I'm wrong, let me know in the comments box below, and don't forget to hit that like and subscribe button, or there will be a crash. I'm just kidding. See you in the next video.